Why is the world betting on India? And why are there so many positive reports, comments and observations from all over the world with regard to India and India's economy? Something seems to be going on. And before we discuss what is going on, let me play out one of those views which we have heard in the past, and once again about what India's economy could be like in the years ahead. Take a quick listen in.
I think India is on track to become a 10 trillion US dollars economy in the coming years. India has gone through important reforms and is now well positioned also in a world where the G2, US and China, is competing fiercely. We have seen that also India is a place for increased foreign direct investments. We also see that manufacturing is now taking place in India that used to be in other emerging economies. We also know that India, with its digital competitiveness, is doing quite well, because digital trade is growing much faster than the traditional goods. The same for services. So India is well placed. I think there is just a question of time before India also becomes the third largest economy.
That was the president of the World Economic Forum. But it's not just the World Economic Forum. There's been a host of reports in the recent past, and practically in the last 24 to 48 hours, two different reports which give us two different points of view, which take us to the same conclusion. Something is going on that is giving foreign investors a great deal of confidence in India as we head into the general elections after 10 years of the NDA government headed by Prime Minister Narendra Modi, and clearly expectations of a return of Prime Minister Narendra Modi once again. Let me first start by talking about what investment banking firm Jefferies has said most recently. And this is very important because, remember viewers, 10 years ago, India was the 9th largest economy, and now Jefferies is saying that it will be the 3rd largest economy by 2027. Currently at around $3.6 trillion, we are the 5th largest. And Jefferies says $5 trillion in 4 years. Now that's Jefferies, which is also pointing out a very important fact that perhaps gets missed in the debate about statistics, the base year on which our GDP estimates are calculated, which is the fact that our GDP, India's GDP, has risen by 7% compounded annual growth over the past decade. And this, Jefferies, drawing us to another important point, because the economy is growing, but so are the stock markets. And Jefferies says that the stock market capitalization, which is the total market capitalization of all the listed companies that are publicly traded in India, will touch $10 trillion by 2030, in just 6 years from now. The reasons very clear: strong domestic flows, and that strong domestic flows also means, viewers, that money that normally would go into real estate would go into gold or remain as cash, sometimes in mattresses and suitcases, is going into the markets. And that money is going in various forms. It's going through mutual funds, it's going through systematic investment plans, it's going through higher risk trading bets, and also fundamental investment bets by seasoned investors. And it's moving out of bank deposits to some extent. Some of the money going into consumption. We are seeing a certain kind of consumption happening, at least in the premium end of the market. And a lot of people are using equity as an option to fulfill their dreams. And that's, in fact, viewers, putting pressures on banks and their deposit mobilization. But coming back to Jefferies and their most recent commentary about what I would say is amongst a long string of comments in the recent past about India's moment. And Jefferies also pointing out one of the fundamental aspects of our startup ecosystem. So while there have been certain negative headlines around certain very large, very well-known startups and different kinds of action, allegation, news reports, for example, for Byju's, or even regulatory action against Paytm, the fact remains that there is a very vibrant startup ecosystem which is driving innovation. Fintech just being one example, edutech, and as we go along, we are seeing newer areas open up in healthcare, in space technology, in drones, and many others. And this is all leading to a situation where the manufacturing engine in the Indian economy is also kicking in along with services. Now, what does this all mean? We've gotten the Jefferies view. Let's now turn our attention to KKR. KKR, some of you might know, one of the biggest investment firms in the world, private equity giant, runs various businesses all across the world. The total assets under management are upwards of $550 billion. So that's not a small amount by any stretch of imagination. And KKR is a company which has invested over $10 billion so far in India, and they have just now raised another large fund, $6 billion plus. It's an Asia fund, and it is expected that some part of that, a significant part of that, will come into India. Now, what is KKR saying? Their top guys were in India, and they've also released a report called the Road Ahead, and they are talking about the India story being a very powerful one and remaining like that. And the reasons for that, now this is very important. Why do they believe that this is the case? The resilience that India's economy showed post-COVID, the manner in which we recovered, the government of India's fiscal stance receiving praise from practically all quarters, including the most recent interim budget, where the temptation to link election announcements to the upcoming Lok Sabha elections was completely kept away, and that received a lot of attention, a lot of credibility it has generated. And KKR saying that India's consumer-centric economy, where higher-end consumers are spending more, and the overall number of consumers, the sheer massive number of consumers, even those at the lower end of the consumption pipe whose spending is not that much, but that is a substantial number. All of that aggregating into a situation where the economy is continuing to derive benefits of globalization. I want to bring up one very important chart that KKR has put out, and this is a comparison that is very, very illustrative. And let's stay with this chart for a moment. And basically, we could say what a decade. A decade, 10 years of a turnaround in India's economy. Very clearly, the years 2013 leading into 2014 weren't good as far as India's perception was concerned, its image was concerned, and the fact that it was an era of multiple scandals. Headlines, news on television, on newspapers, magazines, everywhere used to be dominated by a lot of negative commentary. And that is long past. Look at that chart. Now, what does this KKR generated chart tell us from that latest report which I told you about? 2012 is the reference date, calendar year that they have used. Real GDP at 5.4%. January, look at the growth, 7.6%. Consumer price inflation. And remember, inflation is the worst tax on the poor of any country. While rich people manage to deal with inflation, rising prices, it is the poor who receive the worst deal when prices continue to spiral. And look at that headline CPI number, 8 to 11% versus 5.8%. So in January 24, the higher end of consumer price inflation, and this is measured in a certain way, is at the lower end of what it was 10 years, 11 years ago. Now, core CPI, again this is a metric which measures some of the core components of CPI. Look at it from 9% down to 3.8%. And the policy rate, this policy rate, viewers, refers to the interest rate that determines the cost of capital in any economy. Remember, if you want to grow, you might need to borrow as an individual or as a company. And the rate at which banks, institutions lend you that money is very, very crucial. It is determined by multiple factors, administered, announced, supervised by the central bank, and it is distributed through regulated financial institutions. And that 8% was the rate well over a decade ago, and now it's peaked at 6.5%. So again, cost of capital being lower, and the real policy rate. Now for savers, this is very important. If you're putting in money into fixed deposits, and India still is a fixed deposit nation, the rate of return was negative then versus a little positive at 0.81%. So this chart, very, very crucial to understand 10 years of Modinomics, and also to understand how there is a fundamental shift. There are other details, but let me just conclude by saying some more data on your screen, which continues to sort of show the fact that India's economy, overall fiscal management, consumption within the country, the price situation, exports, overall framework of macroeconomic and policy framework that exists in the country, the central government's core focus areas, spending on infrastructure, on the creation of stable assets, roads, highways, airports, ports, massive investments in educational expansion, at least at the higher level, including through institutes of higher learning, and a significant increase also in social sector spending. What does this all mean for those of you who are especially looking towards the equity markets as a source of higher returns in the future? Now, this is a point that's noted by most experts, including these reports that I am referring to, and this is that while India is now expected to drive at least 1/5 of additional incremental global growth, the point is India is growing, but it is expensive in valuations. महंगा है, घर महंगे हो रहे हैं, stocks are very expensive, other assets are also pretty expensive, because when you see this kind of growth, that is one of the fallouts. And put all of this together, the World Economic Forum, multiple brokerages, big ticket investors from across the world spending time on India. Mark Mobius was in India, he wrote a very detailed report. Practically everyone is bullish on India. What does that mean in stock market terms? It means that stocks will remain expensive. This is a very sort of broad-based statement that I am making, and those valuations, higher valuations, are a price that you pay to enter the club of a high growth country. It's been seen in the past, it's been seen in different countries, but when it comes to India, this is a key issue that can only be tackled when more higher quality stocks keep coming in, and we've seen a IPO boom as many companies have rushed into the markets to tap into what some people describe as a investor frenzy. But the bottom line is that as far as the macroeconomic situation, the financial situation is concerned, you couldn't hear a wrong word these days from anywhere in the world regarding India. There are concerns about K-shaped growth, there are concerns about the rural economy, there are also concerns about where people ask questions, why are HNIs leaving India, why have they left in the past? But I think those are nuanced issues for which a great deal of debate is required, but the headline is very clear. the world is betting on India, and that will mean a situation where India will see continuous rise in valuations, and those valuations will make the world of equity investing more expensive. But as we head into our general elections and the expectations that very soon, perhaps by the second week of March, the Lok Sabha elections will be announced, the election code of conduct will come into place, and election season will well and truly begin in India, and the results will be available in summer. India is a place where most investors are now looking for an entry. Those who are there want to continue to consolidate, and those who haven't entered are looking for the right time to enter. That was a quick snap of why the world is betting on India. I'll be back with more details, more fascinating insights from various research firms. Until I see you again, goodbye.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.